Welcome to Financially Smart Kids, your go-to destination for teaching kids the fundamentals of money in a fun and engaging way. In this video, we will be covering the top 10 financial concepts every kid should know. Don't forget to hit the like button and subscribe to our channel for more exciting financial adventures ahead. Let's begin. Ever wonder why that shiny new toy costs what it does? It all comes down to understanding the value of money. Let's delve deeper into this concept. Money for many is seen as a necessity, a tool for survival. But what if we told you that it's much more than that? It's a means of exchange, a measure of value, and a store of wealth. Think of money as a sort of magical key. It's an interesting comparison, isn't it? This key has the power to unlock a multitude of things. The latest toys, a collection of books, fashionable clothes, and your favorite ice cream. It's a key to material possessions and experiences. However, it's crucial to understand that money on its own isn't magical. So, where does the magic lie, you wonder? It lies in the usage. Money becomes truly valuable when it's used to unlock the doors of your desires. It's the ability to acquire what you want, when you want, and how you want. Let's consider this. Imagine you have a small toy car that you like. It's your favorite and you enjoy playing with it. One day, you walk into a toy store and your eyes land on an even more impressive toy car. This one is bigger, shinier, perhaps even comes with more features. Naturally, you're inclined to have it. The idea of trading your smaller car for the bigger one seems appealing. But alas, the shopkeeper won't agree to this exchange. Why, you ask? It's simple. The bigger, shinier toy car has a higher value. It might have taken more time, more materials, or even more effort to create, and thus it holds a higher price tag. Well, this is where money comes into the picture. Money is a tool that facilitates this exchange. When you pay for a good or service, you're essentially trading your money, your earned value for it. The amount you're willing to part with often depends on how much you value that good or service. If you really want that big shiny toy car, you might be willing to save up and trade more of your money for it. It's about perceived value. The more you want it, the more you're willing to pay for it. But wait, there's a catch. Just because something has a higher price tag doesn't necessarily mean it's better or more valuable to you. You might wonder why. Let's think about it. Would you trade all your money for the biggest toy in the store, even if it was something you didn't really desire? Probably not. Because what's the use of a toy that doesn't bring you joy? That's where understanding the value of money becomes crucial. It's about knowing exactly how much your money is worth and learning to use it wisely. It's about making decisions on what to buy, when to buy, and how much to spend. Now, you might think, how does one learn to make these decisions? It's through experience and understanding. When you understand the value of money, you're more likely to spend it wisely. You'll think twice before buying an expensive toy you'll probably get bored of in a week. Instead, you might save up for that really special toy that you've been wanting for a long time, or you might even choose to spend it on a fun experience or a memorable trip. Understanding the value of money is about making informed choices. It's about knowing when to hold back and when to spend. It's about understanding your needs and wants. It's about prioritizing what's important to you. When we understand the value of our money, we tend to make smarter choices, maybe even save some for future use. Knowing the value of money helps us make smart decisions about what we buy and when. This statement rings true. It's not just about being frugal or stingy, it's about understanding your financial capacity and making choices that align with it. It's about being smart with your money so that it can serve you better. So the next time you wonder why that shiny new toy costs the way it does, remember it's all about understanding the value of your money. Sometimes it's hard to tell the difference between what we want and what we truly need. Picture this. You're walking through a store and you see the latest video game that everyone's talking about. It looks amazing. You're excited and you want it. But wait, you also need a new pair of shoes for school because your old ones are worn out. So what do? Do you buy the video game or the shoes? This is where understanding the difference between wants and needs comes into play. A need is something you must have to survive or carry out your daily activities, like food to eat, clothes to wear, or in this case, shoes to protect your feet. On the other hand, a want is something that would be nice to have, but you can live without it. Yes, the video game would be fun to play, but you don't need it to go about your day. Now, this doesn't mean you should never buy things you want. It's okay to treat yourself sometimes. But it's important to make sure your needs are taken care of first. If you only have enough money for the shoes or the video game, the shoes should be your priority because they're a need. Once your needs are covered, you can start to think about your wants. Maybe you decide to save up for that video game. Each time you get some money, whether it's from doing chores or a birthday gift, you put a little bit aside until you have enough to buy the game. It might take some time, but it's worth the wait. By understanding the difference between needs and wants, you can make smart decisions about how to spend your money. You'll be able to prioritize what's really important and avoid impulse purchases that can drain your savings. And who knows? You might even find that some of the things you thought were needs are actually wants. Understanding our needs and wants helps us prioritize our spending and save money. Imagine being able to buy that expensive toy you've always wanted. That's the power of saving. Saving is like a superpower. It's the ability to keep some of your money safe and sound for future use, rather than spending it all right away. It's like having a secret stash of candy bars that you've saved for later, instead of eating them all at once. Just picture this. Imagine you've got your eyes on a super cool toy. It's shiny, it's new, and it's just a little bit expensive. You can't afford it right now, but if you start saving some of your pocket money each week, in a couple of months, you'll have enough to buy it. So where do you keep all this money you're saving? Well, one way is to use a piggy bank. Yes, you heard right, a piggy bank. It's a fun and simple way to start saving. Every time you get some money, whether it's from doing chores or as a gift, instead of spending it, you put some of it into your piggy bank. As time goes by, your piggy bank starts to fill up. You'll be amazed at how quickly your savings can grow. And the best part is, when you've saved enough, you can finally buy that toy you've been dreaming of. But saving isn't just about buying cool toys, it's also about being ready for unexpected expenses. Just like a superhero is always ready for whatever comes their way, having savings means you're prepared too. Maybe your bicycle needs a repair, or perhaps you want to buy a special gift for a friend's birthday. When you've got savings, you can handle these expenses without a worry. So start saving today and unlock your superpower. Saving might require a little patience and discipline, but it's worth it. Because when you save, you're not just storing money, you're also building a brighter and more secure future. Saving money not only helps us buy what we want, but also prepares us for unexpected expenses. Ever run out of money when you needed it the most? That's where a budget comes in handy. Have you ever thought about what you'd do if you were given $100? Would you spend it all at once, save it, or maybe do a little of both? Well, a budget helps you plan for these decisions. It's like a roadmap for your money, guiding you on how to spend, save, and even give. Imagine you get an allowance of $20 every week. Now, without a budget, you might be tempted to spend it all at once. But let's see what happens when we use a budget. First, we'll allocate a portion for spending. This could be for things you want, like a new toy or a fancy ice cream. Let's say we decide to set aside half of our allowance for this. That's $10. Next, we'll dedicate a part of our allowance for saving. This could be for something big you're dreaming of, like a new bike or a video game console. It could also be for unexpected expenses, like replacing a broken phone charger. For this, we'll set aside 30%, which equals $6. Lastly, we'll allocate a portion for giving. This could be for helping others, like donating to a charity or buying a gift for a friend's birthday. For this, we'll set aside the remaining 20%, which is $4. With this budget, we've planned for fun spending, saving for the future, and giving to others. And the best part? We've done all this without running out of money. But remember, a budget isn't set in stone. It's flexible. As your needs and wants change, you can adjust your budget. The important thing is to have a plan for your money so it doesn't just disappear. And that, my friends, is the beauty of a budget. It's not about restricting what you can do. It's about empowering you to make smart decisions with your money. A budget helps us manage our money better and ensures we have enough for everything we need. Keeping track of your money is like a treasure hunt. You need to know where it's going. Imagine you're a pirate sailing the high seas. Your treasure chest is your wallet, and the gold coins are your money. If you don't keep a close eye on your treasure, you might lose it all before you even realize it. That's why it's so important to keep track of where your treasure is going. Think about this. You've just got your allowance or some money from doing chores. You decide to spend some on a new toy, some on candy, and you save a little bit too. But can you remember exactly how much you spent on each of these things? That's where tracking your treasure comes in. Let's take an example. Imagine you're using a notebook to write down every time you spend money. You buy a toy car for $5, you write it down. You get a delicious ice cream for $2, you write it down. This way, at the end of the week or month, you can look back and see exactly where your money went. This treasure map of your spending can help you understand if you're spending too much on things you don't really need, or if you could save more money for something really special. In today's digital age, you can even use a mobile app to keep track of your spending. It's like having a personal treasure map right in your pocket. You can easily input your spending and categorize it like toys, sweets, or savings. This can give you a clear picture of where your treasure is going and help you make better decisions about your spending in the future. Remember, your money is your treasure, and just like a pirate, you need to guard it well and spend it wisely. By keeping track of your spending, you can ensure that your treasure chest is always full, and you're ready for any adventure that comes your way. Tracking our spending helps us see where our money goes and find ways to save more. Borrowing can be a lifesaver, but it can also sink us into a sea of debt. Let's take a moment to explore the double-edged sword of credit and debt. Imagine you're at a candy store, and you found the perfect jumbo bag of sweets, but you're a few dollars short. Your best friend is there too, and they offer to lend you the money. You're thrilled. You can enjoy your sweets now, and promise to pay your friend back next week. This, in a nutshell, is how borrowing money or credit works. It's a way to get something now and pay for it later. But what happens if next week rolls around and you don't have the money to pay your friend back? Maybe you spent your allowance on something else. Or maybe you didn't get as much as you thought you would. Now you're in debt, which means you owe money. And let's not forget, your friend might be a bit upset too. Debt can be like a snowball rolling down a hill. If you don't take care of it quickly, it can get bigger and bigger until it's hard to manage. That's why it's crucial to think carefully before borrowing money. Can you pay it back in time? What will you have to give up to do so? And most importantly, is what you're borrowing for really worth it? This doesn't mean all debt is bad. Sometimes borrowing can help us achieve big goals like going to college or buying a house. But these are long-term investments, not short-term splurges. They can lead to better opportunities and a brighter future, making the debt worthwhile. So remember, when you borrow money, you're making a promise to pay it back. It's important to take that promise seriously. If you do, credit can be a helpful tool. But if you're not careful, it can lead to a mountain of debt. Understanding credit and debt helps us borrow responsibly and avoid financial troubles. It's a crucial part of being financially savvy, so take this lesson to heart. After all, no one wants to be swimming in a sea of debt. Money doesn't grow on trees, but you can earn it through work or entrepreneurial activities. So, let's dive into how you can make your own money. It's not just for adults, you know. Imagine, it's a sunny Saturday morning, and you're armed with a broom, ready to sweep the leaves in your backyard. As you finish the task, your parents hand you a few dollars. This, my friends, is called an allowance. It's a small amount of money that you earn by doing chores around the house. It could be anything from cleaning your room, washing dishes, or even feeding your pet. But hey, chores aren't the only way to earn a buck. You can also channel your inner entrepreneur. An entrepreneur is someone who creates a product or a service and sells it to make a profit. Think you're too young to be an entrepreneur? Think again. Let's consider this. You love making friendship bracelets. You spend hours weaving colorful threads into intricate patterns. Then, you have an idea. Why not sell these bracelets to your friends and neighbors? With a little effort, you set up a small stand outside your house, and voila, you're in business. This is what we call an entrepreneurial activity. From making and selling lemonade to designing custom greeting cards, there are countless ways to earn money while doing something you love. And here's the best part. As an entrepreneur, you're your own boss. Remember, earning money isn't just about having extra pocket change to spend. It's about learning the value of hard work, responsibility, and creativity. When you earn your own money, you appreciate it more because you understand the effort it takes to make it. Plus, it gives you a sense of achievement and independence. So, whether you're scrubbing dishes or selling handmade crafts, remember, every penny you earn is a step towards understanding the value of money. And who knows? You might just find that you have a knack for business along the way. Earning money helps us appreciate its value and encourages hard work and creativity. What if your money could make more money? That's the magic of interest. Imagine you're a wizard and you have a magic pot. Everything you put in this pot multiplies over time. So if you put in 1 gold coin today, you might find 2 in there after some time. That's how interest works, but with your money instead of magic gold coins. Interest is like a reward you get for saving or investing your money. When you put your money in a bank, the bank uses it to help other people and businesses. As a thank you, the bank gives you a small portion of the money it makes. This is called interest. Now let's take a look at how this works with a savings account. Suppose you have $100 and you decide to put it in a savings account. The bank might offer you an interest rate of, say, 2% per year. This means that after a year, you'll have an additional $2 just for keeping your money in the bank. But here's where it gets even more magical. The next year, you're not just earning interest on your original $100, but also on the $2 you earned as interest. This is known as compound interest. Over time, this process can help your money grow faster and faster, just like a snowball rolling down a hill. Of course, like any magic, interest has its rules. Banks have different interest rates, and the higher the rate, the more money you can make. But be careful. Just as you earn interest when you save or invest money, you pay interest when you borrow money. The more you borrow and the longer it takes you to pay it back, the more interest you'll end up paying. But don't worry, understanding interest isn't as hard as learning a spell. Remember, interest is a tool that can help you make more money. It's not just about saving, it's about making your savings work for you. Understanding interest helps us make our money work for us, and not the other way around. Investing is like planting a seed and watching it grow, but it also comes with risks. You've probably heard about investing, right? It's when you put your money into something with the hope that it will grow over time, much like planting a seed and waiting for it to bloom into a beautiful flower. But how does it work? Let's imagine that your friend has a lemonade stand. She's doing pretty well, selling lots of lemonade, and she wants to make it even bigger. She needs money to do that, so she offers you a deal. If you invest some of your money in her lemonade stand, you'll own a small part of it and share in the profits. Sounds exciting, right? You give her $10 and now you're an investor. But here's where the concept of risk comes in. Risk is the possibility of losing something of value. In our lemonade stand example, the risk would be the chance that your friend's lemonade stand doesn't do well. Maybe it rains for a week straight, or maybe a new lemonade stand opens up across the street. If the lemonade stand doesn't make a profit, you might not get your $10 back. Now, the flip side of risk is reward. Reward is the gain you get from taking a risk. If the lemonade stand does really well, you could make more than your original $10. That's the exciting part of investing, the possibility of a reward. But remember, higher potential returns often come with higher risk. So, while you could make a lot of money from your investment, you could also lose money. That's why it's important to understand the risks before you invest. Investing can be a great way to grow your money, but it's not without its challenges. It's like going on an adventure. There can be bumps along the way, but the potential rewards can be worth it. Understanding investing and risk helps us make informed decisions about where to put our money. So, the next time you think about investing in a lemonade stand or anything else, remember the balance of risk and reward. Dreaming of buying that expensive toy? Setting a financial goal can make that dream a reality. Just like soccer players aim for the goal post, in finance, we also set goals. But instead of a ball, we're aiming to gather enough money for something we want or need. Now, what's a financial goal? It's a target or aim you set to save or earn a certain amount of money for a specific purpose. Let's say you've been eyeing a super cool bicycle that costs $100. That's your financial goal. But how do you reach this goal? It starts with a plan. You could decide to save $5 from your allowance every week. That means you'd need to save for 20 weeks to buy the bicycle. That's your short-term financial goal. Long-term financial goals are for things further in the future. Maybe you want to save enough money to go to a fancy summer camp next year. That will take longer to achieve, but the reward is also bigger. Remember, financial goals aren't just about buying things. They can also be about achieving milestones like saving your first $100 or donating a part of your savings to a cause you care about. Setting financial goals is important because it teaches us to manage our money wisely. We learn to prioritize our needs and wants, to save, and to wait patiently until we have enough money for what we want. It also gives us a sense of accomplishment when we meet our goals. Just like a treasure map leads to a hidden chest of gold, your financial goals guide you towards your financial treasures. Whether it's a bicycle, a summer camp, or your first $100, each goal you achieve brings you one step closer to understanding the value of money and how to manage it. So next time you find yourself dreaming of that expensive toy, remember, setting a financial goal can make that dream a reality. Because setting financial goals gives us something to strive for and teaches us patience and perseverance. Knowing about money is more than just counting coins. It's about understanding how money works and how to use it wisely. Let's take a quick journey back and remember the 10 financial concepts we've uncovered today. First, we discovered the value of money, learning that it's not just a piece of paper or a shiny coin, but a tool we can use to get things we need or want. But speaking of needs and wants, we learned to distinguish between the two, understanding that needs are essentials while wants are extras. Then, we discussed the power of saving, highlighting how setting aside a portion of our money today can help us prepare for future needs or unexpected situations. We also introduced the idea of a piggy bank or a savings account as a place to keep and grow our savings. Budgeting was our fourth stop, where we learned how to plan our spending, saving, and giving by allocating money for different purposes. We also discovered the importance of tracking our spending, making sure we know where our money is going and how much we have left. Our journey also took us to the realm of credit and debt, where we emphasized the importance of borrowing responsibly and the consequences of accumulating too much debt. We also talked about ways to earn money, whether through work, entrepreneurial activities, or chores. The magic of interest was another important lesson, where we learned how our money can grow over time in a savings account, or how it can increase when we borrow. We also introduced the concept of compound interest, the idea that our money can earn money. Investing and risk were also on our path, teaching us that higher potential returns often come with higher risks. And finally, we talked about setting financial goals, both short-term and long-term, to help us stay focused and motivated in our financial journey. These concepts are not just theories in a book, they're practical tools that can help us make smart money decisions now and in the future. Financial literacy isn't just for adults. Kids too can benefit from learning about money. After all, it's never too early to start. Banks are more than just a place to keep your money safe. They play a crucial role in our financial lives. Just as we learned about the power of saving and the magic of interest, banks are institutions that can help us leverage these concepts. Let's dive deeper into the role of banks in our financial journey. Firstly, banks provide a secure place for us to store our money. Instead of keeping it under our mattress or in our piggy banks, depositing our money in a bank ensures it's safe from theft or loss. Furthermore, banks are insured, meaning even if the bank faces difficulties, our money is protected. Secondly, banks can help us save and grow our money. Remember the magic of interest? Well, banks often pay interest on the money we deposit in a savings account. This means our money earns more money over time, aiding in our financial growth. But banks aren't just about saving. They can also assist us in reaching our financial goals, offering services like loans for big purchases or investments, and tools to manage and track our money. This brings us to the concept of a bank account. Having a bank account not only provides a safe place for our money, but also allows us to access it conveniently. We can deposit our earnings, pay our bills, make purchases, and even transfer money to others, all from our account. Plus, with the advent of online banking, these services are now at our fingertips anytime, anywhere. Understanding how banks work can help us make the most of our money and achieve our financial goals. So, while we continue to learn and grow in our financial journey, let's not forget the important role banks play in helping us navigate our financial world. Remember, knowledge is power, and financial literacy is a superpower. Let's use it wisely. Moving on from the role of banks, let's tackle a topic that might seem intimidating, but is a crucial part of our financial lives: taxes. We all have heard of them, we all have to pay them, but do we really understand them? Taxes are compulsory contributions to state revenue, levied by the government on workers' income and business profits, or added to the cost of some goods, services, and transactions. In simpler terms, they're a bit of our income that we contribute to the government. But why do we pay them? Taxes are essentially the fuel that runs our government. They fund public services, infrastructure, and welfare programs that we all benefit from. Now, there are different types of taxes, but let's focus on two main ones: income tax and sales tax. Income tax is a tax on the money you earn. This includes wages from your job, profits from your business, and even investment income. The amount of income tax you pay often depends on how much you earn. The more you earn, the higher your tax rate. Sales tax, on the other hand, is a tax on goods and services you buy. This tax is added to the price of the item or service and is paid at the point of sale. The rate of sales tax can vary depending on the item and the location. So, when you earn money, a portion goes to income tax. When you spend money, a portion goes to sales tax. And all these taxes contribute to making our society function, from paving our roads to funding our schools and hospitals. Understanding taxes may seem daunting, but it's an integral part of financial literacy. It helps us to become responsible citizens, make informed decisions, and plan our finances effectively. So, as we continue to learn more about money, let's remember, every penny counts, whether it's in our bank account or contributing to the greater good of society. As we journey deeper into our understanding of money, let's shift our focus from obligations to opportunities. Giving to others is not just a noble act, but also a valuable financial concept. Welcome to the world of charity. Charity, at its core, is the act of helping others by giving money, goods, or time. This act of giving has benefits that extend beyond the immediate recipient. When we donate to a cause we care about, we're not just supporting their work, but also reinforcing our personal values and making a statement about what's important in our lives. But did you know that giving to others can also benefit us? Yes, indeed. Besides the feel-good factor and the joy of making a difference, giving can also have tangible financial benefits. Many countries offer tax deductions for charitable donations, which can reduce our taxable income and potentially lower our tax bill. It's like a reward for doing good. However, as with all financial matters, it's important to give responsibly. Before making a donation, research the organization to ensure it's legitimate and that your contribution will be used effectively. Also, remember to keep a record of your donations for tax purposes. Understanding the value of charity can help us become more compassionate and financially responsible individuals. It teaches us that money isn't just about earning and spending, but also about sharing and caring. Because at the end of the day, the real value of money lies in the good it can do, not just for us, but for our community and our world. As we continue our journey of financial literacy, remember this: Every penny given in charity can make a difference, and every act of generosity counts. Now that we've explored the concept of giving, let's take a leap into the future. Welcome to the world of digital currency, the next evolution of money. Digital currency, also known as cryptocurrency, is a type of currency that only exists in digital form. Unlike traditional forms of money, it's not controlled by any central bank or government. Instead, it relies on cryptography for security, hence the name cryptocurrency. Bitcoin, Ethereum, and Ripple are just a few examples of the many digital currencies available today. But what makes digital currency so revolutionary? Well, its benefits are numerous. It offers a level of anonymity that traditional money can't. It can be sent and received anywhere in the world at any time, without the need for a bank. Plus, its decentralized nature makes it resistant to inflation and government control. However, like all financial matters, it's not without its risks. The value of digital currency can be highly volatile, and security issues can arise if your digital wallet is not properly protected. Furthermore, the lack of regulation can make it a risky investment. So what does this mean for our financial lives? Well, as digital currency becomes more mainstream, it could change how we save, spend, and invest. It's even possible that one day, digital currencies could replace traditional money altogether. Understanding digital currency is crucial to navigating the future of finance. As we move into this new era, we must equip ourselves with the knowledge to make informed financial decisions. So, as we continue on this journey of financial literacy, let's embrace the future of money and remember, the more we know, the better we can adapt to the ever-changing world of finance. As we start to wrap things up, let's take a moment to reflect on the journey we've been on together. We've delved into the mystery of money, learned how to distinguish between our wants and needs, and discovered the power of saving. We've tackled budgeting basics, tracked our treasures, and wielded the double-edged sword of debt. We've understood the importance of earning our keep, the magic of interest, and the balance between investing and risk. We've set financial goals, emphasized the importance of financial literacy, and explored the roles of banks and taxes. We've appreciated the value of charity and taken a leap into the future with digital currency. Why are these concepts so important? Because understanding money and how it works is a fundamental life skill. It empowers us to make informed decisions, to plan for the future, and to navigate the complexities of the financial world. It's especially crucial for young people to grasp these concepts early on, as it lays the foundation for their future financial health. So, let's not stop here. Let's continue to learn, to question, and to explore the world of finance. Let's keep the conversation going, because the more we know, the better we can navigate the ever-changing financial landscape. Remember, understanding money is not just about accumulating wealth, it's about making informed decisions, planning for the future, and achieving financial freedom. It's a superpower that can change your life. So use it wisely and never stop learning. If you enjoyed this video, don't forget to give it a thumbs up and subscribe for more exciting content. And always remember, you're never too young to start making money and learning about the magic of financial literacy. See you next time!